We're a month away from earnings, and there's that saying, what comes up must come down.
What goes up must come down.
It seems like that is the case with SoFi. Even after securing the most awaited bank charter, SoFi is plummeting along with other fintech companies out there. I know we haven't been posting much the past few weeks because we've been extremely busy, but just know we're still holding SoFi strong and haven't sold any shares. Right from its all-time low of $10.51 per share on January 28, SoFi is trading around $13.27 per share at the time of recording this. So the question is, what do the analysts think of this? Do you think it's buying us time to load the boats? Tune in and find out until the end of this video. Hello and welcome to Wealth Gambit. On this channel, we cover the latest stock trends and research. If you like that type of content, make sure to like and subscribe, and don't forget to hit that notification bell so you'll be updated as soon as we drop a new video. For all of our loyal SoFian soldiers who watched our videos, we recently created a Facebook group called SoFi Investors. So make sure you join that group so you'll be updated with any SoFi related news. In today's video, we'll go over what analysts think about SoFi stock now that it has reached a new all-time low, and take a look at what's happening in the fintech industry as a whole. According to Motley Fool, the Nasdaq composite, made up of all domestic and international stocks in the Nasdaq market, has declined by 10% in the previous month. It was one hell of a ride last month for the fintech unicorns out there. Upstart and Square are down by about 25%, PayPal plummeted by about 12%, and SoFi is no exception to the bloodbath. Because like we said, even after getting the most awaited catalyst, SoFi is also down by 20% compared to last month. It seems like SoFi was in the forefront of the great Wall Street bets and had everyone going bananas. Banana! But remember what Grandpa Buffett has always told us, just mind your own business and ignore the market noise. As the month ended, fintechs look like they're getting ready for a bounce back, especially New Holdings, a Brazilian fintech that we featured right here. The OGs will know. Anyways, this Buffett-backed fintech's trying to make a comeback as it rose to nearly 10% at the end of the month, and on top of that, SoFi, along with Lending Club, has also started to work its way back up 11 to 12%. The fintech industry's had a really rough month, but it's nothing new ever since the Fed scared the out of investors for pumping inflation. Some say the said stocks are oversold, and some are in the corner of their homes panic selling. What do you guys think? Comment SoFi we got you down below if you aren't panic selling. Even when the odds don't seem to side fintech investors, analysts such as Rosenblatt Securities, Citigroup, Wedbush, Mizuho Securities, and Jefferies Financial Group issued a buy rating on SoFi stock. Moreover, analysts at Jefferies Financial Group increased their SoFi earnings per share estimates for SoFi for the full year of 2021. According to their report, which was released last January 26, Jefferies Financial Group now anticipates that SoFi will post earnings per share of -$1.04, up from their previous report of -$3.48 per share. Financial analysts and Oppenheimer even boosted their price target on SoFi from $23 to $28 and gave SoFi stock an outperform rating. Other financial institutions also started covering SoFi. Keefe, Bruyette, and Woods issued a market perform rating on SoFi stock, and early this year, Goldman Sachs started covering SoFi stock and issued a neutral rating. And amidst the bloodbath that's happening in the fintech industry right now, here's what Dan Dolev, an analyst from Mizuho, anticipates in the second quarter of 2022 for the fintech industry.
The Robinhood story, but what's the story for the rest of the space?
Yeah, it's not declines. I should take it back. It's actually decelerating growth, right? So stocks actually react very positively when growth is reaccelerating. And what we've been through because of the, I call it like FIFO, right? First in, first out. So we went into COVID. Tech benefited dramatically or fintech specifically dramatically from COVID. It also saw the toughest comps, because of COVID. For example, Robinhood's toughest comp is the first quarter of 2022, right? Because that's the meme stock kind of era of last year. So once we get through that, so it's not like growth is declining, it's actually just slowing. The reacceleration in growth is what's going to get the oomph or the momentum back into those stocks into the second half.
So the whole fintech industry seems to be in a bloodbath, but it seems like it won't last for too long, at least according to some analysts. We're personally hopping on this early year sale, and we're adding more to our SoFi positions. As always, folks, none of this is financial advice, so always do your own research. That wraps up today's video. What are your thoughts on this news? When do you think SoFi will get back to the 20s price range? Let us know in the comment section down below. As always, if you found any value in this, make sure to smash that like button for the YouTube algorithm. And until next time, peace.